Here are today's top stories in crypto. After the January rally, the crypto market takes a dip as the dollar index shows a minor recovery. Elon Musk caused another huge pump on a meme coin with a single tweet, making the coin explode by 130%. The largest block ever recorded in the Bitcoin network was mined on the 1st of February using the NFT project Taproot Wizards. And 53% of institutional investors choose AI over crypto, according to JP Morgan's latest report. I'll give you more details now. Let's start the show. Welcome to another Monday episode of Crypto Corner, everyone, the video podcast where we talk everything crypto related so you can stay on top of the latest developments and market analysis and help you navigate easily in the crypto space. All major crypto markets are in the red today after Bitcoin saw another rejection from its 24,000 resistance level yesterday and took a dip, falling below 23k, a drop of over $1,000 in a day. Bitcoin is down 2.5% in the last 24 hours, while altcoins, of course, print larger losses. This is usually the case. Money flows out of altcoins faster than Bitcoin, as long-term holders trust Bitcoin more than any alt, so no surprise there. Bitcoin is now entering a crucial support level here at this 22,700 to 22,300 range, and this is very important that we manage to hold this support. If we break this support, we can face another significant drop in the coming days. One of the key factors that play into this drop of Bitcoin is the dollar index. We saw a sharp bounce of the dollar index on the way up, a move that was to be expected, although in my previous analysis I already drew this, but I didn't expect it to be so sudden and quick. Nevertheless, I did warn you about this bounce in the Dixie, as we had several indicators that signaled this kind of a move. If you remember last week, I shared this chart with you and talked about this bounce, which will inevitably affect Bitcoin and crypto as a whole. Well, it happened over the weekend, which is why all crypto is in the red right now. The good news is that now we can expect a correction in the Dixie. We see that the stochastic RSI is in the overbought region, is actually entering the overbought region, which is calling for a drop in the next few days. So possibly after a couple of days of this price action, we're going to see a correction in the Dixie, which will bring crypto up again. So definitely keep an eye on the Dixie, the dollar index, because it is highly correlated with Bitcoin. Despite the pullback in crypto though, the overall public sentiment remains bullish for many of the top cryptocurrencies. According to token metrics, we can see here that the sentiment index is very positive on Ethereum, BNB, Toncoin, Shiba Inu, Doge, Leo token, Solana, Polygon, Stellar, OKB, Litecoin, and of course it is going down as we scroll down. Bitcoin is actually here with just positive, not very positive, but as you can see, overall sentiment for all of these top cryptocurrencies remains quite positive and bullish. One token that token metrics is extra bullish on and is actually flashing a buy signal right now is Aptos, APT. This is one of the cryptocurrencies that they recently reviewed, and they expressed very bullish sentiment on Aptos, which is making it on top of my watch lists. I haven't actually jumped into Aptos just yet. You can see it's 9% down in the last 24 hours, which is opening a great window for us for accumulation. In the upcoming episodes of Crypto Corner, I will be sharing with you the altcoins that are already in my portfolio or that I'm watching and waiting to accumulate, so make sure you catch this episode. In other news, financial services giant JP Morgan has released its latest e-trading audit report. It reveals the sentiments of institutional investors worldwide regarding the future of trading, technology, crypto, and AI. Well, the report, now in its 7th year, was drawn from a January survey of 835 institutional traders in 60 global markets. What's interesting is that JP Morgan concluded that 53% of the institutional investors believe that artificial intelligence and machine learning will be the most influential technology in shaping the future of trading over the next 3 years, a significant increase from 25% the previous year. This makes AI the clear winner 4 times more often cited than blockchain and distributed ledger technology, which came in at 3rd place with 12% of the vote, after API integration 14%. I will talk about AI-centric cryptocurrencies in another upcoming episode, and I will give you my top picks for AI tokens to invest in, so make sure you're subscribed and enable notifications. Don't miss that episode, as we are in accumulation stage for the next bull run already. Alright, moving on to the next topic. Elon Musk returns to his glory days of Memecoin pumps with this tweet about Baby Doge, which saw a whopping 130% pump as the tweet went viral. Baby Doge is a meme coin launched in the summer of 2021, and it's now live on both Ethereum and Binance blockchain with built-in deflationary measures and aims of real-world utility. Holders of Baby Doge earn rewards from network transactions. The coin has a huge overall supply of 420 quadrillion tokens and a circulating supply of 164 quadrillion. It also has its own decentralized exchange called Baby Doge Swap, as well as its own non-fungible token called Baby Doge NFT. Baby Doge recently announced the launch of a burn portal that allows its holders to burn or eliminate tokens from supply by sending them to a dead address. According to the project, over 202 quadrillion Baby Doge tokens worth $502 million have been burned so far as of February the 3rd, representing nearly half of its maximum supply. This is not a signal to rush and buy the token though. After such a huge pump in such a short space of time, you are guaranteed to see a dump. So the last thing you want right now is to FOMO into a token after this pump. If anything, wait until it corrects. I will not be buying this anyway, but it will stay on my radar and I will monitor its performance to see if I want to add it to my portfolio. Speaking of which, as I said, I will also share with you my altcoin portfolio in a later episode. You can see what I've been accumulating throughout the last few weeks and also the ones that I am still waiting to accumulate. Make sure to catch that episode. In other news, the largest block ever recorded in the Bitcoin network was mined on the 1st of February using the NFT project Taproot Wizard. This caused more controversy among the Bitcoin community, with most investors feeling concerned about full blocks and their impacts on the fees and the speed of transactions, as well as the security of the Bitcoin network. Some calling it an attack on the network. Still, the developers of this project argued that the transaction is an innovation based on the concept of ordinals. Last week, I talked about this NFT project that was launched recently and caused much controversy. Ordinals were introduced as a solution to the issue of Bitcoin's lack of stable public identity. Bitcoin addresses are typically single-use and wallet accounts are local, making ownership of public and private keys not transferable. Ordinals aim to resolve this by marking each Satoshi in each output, creating a transferable account of identity for Bitcoin. In this NFT project, Taproot Wizard, the publisher uses a specific Satoshi to refer to a JPEG image to implement the identification and circulation of the NFT. The concept is innovative, but it has also sparked concern within the Bitcoin community. I'm not really convinced that this is necessary at all. It's bad for privacy, removes any last bit of anonymity that there is. I don't know. Let me know what is your take in the comments below. I've never been in favor of bigger blocks. The rapid expansion of the Bitcoin blockchain size would increase the requirements for devices running a full node, making it even less profitable to mine unless you're a big facility with hundreds of mining rigs and basically a big company, thus eliminating any independent miners left, causing even more centralization to, a bigger degree. It could also reduce the network's anti-censorship capabilities. Additionally, it could impact wallet, mining pools, and browser facilities, leading to some failures and reduce the security of the network. None of this is justified by ugly JPEG drawings, baby-like drawings, I would say, like this one here. So I'm not a fan, as you can tell. Alright, well, this wraps up today's episode of Crypto Corner, guys. I hope this is helpful, and if you have any questions or any requests for topics to cover, let me know in the comments below. Make sure that you show your support by leaving a like and also share this with someone else who would benefit from watching it. And also make sure that you check out the links in the description, where I drop the links to all of the crypto services that I'm personally using and that I recommend to you. In my next episode, I will be meeting a crypto OG who will be sharing with us his knowledge about Bitcoin and the crypto space in general. He's been in crypto since day one, since the very beginning, since the publishing of the white paper. So we will be talking about NFTs on Bitcoin and the scaling of Bitcoin, layer 2s as well on Bitcoin. In a previous episode, we talked about layer 2s on Ethereum. I think it's time to talk about layer 2s on Bitcoin. So make sure you catch this episode. And also while you're here, just pick another one of my previous videos and I'll see you in the next one.